guests back into the main hall for our final panel before lunchtime. And then, of course, we'll have a couple more panels after lunch. But this panel that we'll have right now is named The Future of Virtual Banking, Trends and Threats. Actually, personally, this was one of the most anticipated ones that I was looking forward to. And this topic will explore the emerging trends and potential threats in the virtual banking sector, including the impact of virtual currencies and the increasing demand for digital banking services. It will also touch on the future of virtual banking and its potential impact on traditional banking institutions. So this is the panel that's about to start. Probably we'll wait for another 1 minute before I call the moderator and the distinguished panelists. In this one, we'll have 1, 2, 3, 4 panelists and 1 moderator. So we'll be 5. Already they're waiting for us. So we'll just wait for another minute. The startups were really impressive, to be honest. And I have good news. We have another 5 international startups pitching after lunch. So just to reiterate the remainder of the program, we'll have a lunch break after this panel. And then after the lunch break, we'll be having 1 panel, 1 startup session, and then another panel. And that will lead us to the closing ceremony of the SOFTin Space 2023. So with that, we'll end SOFTin Space for now. But as you can anticipate, SOFTin Space will continue to grow with future events in Istanbul and across the region in North Africa and the Middle East. So that's really good news. And before we move to the panel, we'll wait for a little bit more for our guests to arrive. Dear NS Bey, should we begin? Okay, so let me introduce you to our moderator of the panel. It's a really important name in the industry, and I would like to introduce Deniz Guarda, author, founder, and CEO of Zetodium Group and Open Business Council. It's a pleasure to have you, sir. Please, as the moderator, we put you right in the middle, so
thank you so much.
So it'll be easy to coordinate. And our other panelists, Mr. Michael Regan, Product Marketing Director at GRG. In the morning, he had a really good presentation about the products of GRG, very impressive. And now, another familiar face, Bernard Patterson, Glory Regional Manager. He was again with us in the morning, but today they'll be discussing the virtual banking trends and threats. And now, another special name will be with us, Randa Al-Rifai, founder of the Lebanese Association for Digital Transformation, thought leader and Web3 educator. Nice to meet you. Pleasure to have you here with us. And finally, Omran Shaibi, Deputy Governor Advisor for Technology at the Central Bank of Libya. Honored to have you, sir. So this panel, it's at 1:30. At 2, I'll give you a cue to wrap it up for another 5 minutes. And then hopefully by 2:10, we'll head to lunch. So hope it will be a fruitful panel.
Thank you all. I hope we'll get more people coming from the break. But we'll start with the introduction first of each of the panelists. So my name is Deniz Guarda. I've been writing about fintech and banks and future of banking, future of money And of course, virtual banking is one of the biggest topics, especially with everything happening in the world, in economy, and in technology. And I think the challenges are going to be much bigger, given especially what happened in the last couple of months with the traditional banking and the most advanced banking having a lot of crossovers, but as well, I will look at the future of the world economy, the future of technology and finance. At the moment, we are going through all the challenges coming through virtual reality, traditional, advanced disruption, especially with AI. There's a lot of questions how AI is going to disrupt the entire civilization. And we have already ChatGPT probably more advanced than actually humanity. And this is, I work in AI and I can say that is true. It's not any kind of fake news. And this is just the beginning. But at the same time, and I would like to start with some numbers before going to the topic. So the topic is the future of virtual banking, trends and threats. So that's a big topic. We could talk about this for 2-3 hours. And we have 4 fantastic speakers here that have a lot of experience on this, each of them in different areas, which will make this a very rich and wealth diversity. We have only one lady, but we represent the gender here as well, and we have a lot of geolocation and different expertise. But as some notes I would like to talk about, when I talk about trends, definitely virtual banking is right now mainstream worldwide, with emerging markets right now have a bigger penetration than actually traditional markets. But we don't have a lot of difference in terms of everyone in this room is more or less using the same kind of technologies. What makes the difference is, especially the regulatory parts of these topics, the traditional versus the more advanced parts and startups and big corporations working on this. There's some kind of numbers that people forget. For instance, if you look at Amazon as an example, is the biggest fintech player in the world because it has more companies registered than any other platform in the planet, especially in the Western world. And then if you look at Alibaba, it became so big that Ant Financial became a separate organization and in some ways had to be partly controlled and managed as well with the Chinese central bank. So what we have right now is actually bigger challenges when it comes to virtual banking that probably, I would say, in all the history of humanity. But as well, this represents a lot of opportunities for people here in the room, how we deal with this and how we can actually create solutions for this. So you're going to be talking about the trends, and you're going to be talking about the threats and all the challenges that are coming out of this. So I would like to introduce the panelists. They will probably present a bit about them. I think it will be easier for them because they have all fantastic wealth of knowledge and experience. And I will start probably with the ladies. So Randa Al-Rifai, she was already described before. I'll start by introducing yourself and then we go one by one through the panel.
Hello everyone, so my name is Randa. I come from the banking and finance industry for 15 years of experience focusing on compliance and AML. I started the first digital transformation association in Lebanon in 2018, and after that I quit my full-time job and have been an advocate for blockchain, cryptocurrencies and emerging technologies. I also cater consultancy on the subject and trainings and workshops. Thank you.
Thank you. I would pass to you, Omran Shabi. You are here representing a central bank, which is a responsibility.
Thank you. My name is Omran Shaibi. I'm the advisor for technology for the deputy manager of central bank. I have been involved in technology for over 25 years and more than 15 years in the finance and the economy. What I've been seeing for the last 10 years at least, and for the, in specific, and the last 2 years, what happened is a revolution when it comes to banking and when it comes to technology. And if we are not aware and we're not ready to deal with such change, we will find ourselves out of this business, especially for the commercial banks and for the fintechs.
Thank you. And I would pass right now the word to Bernard Patterson, Regional Manager of Glory.
Thank you. So I'm Bernard Patterson. I've been with Glory and previously Telaris and De La Rue, which is the route this company has come. for over 30 years, experience in delivering and selling cash handling solutions. So my background is very much from the traditional side, finding solutions for the problems for banks to actually handle physical cash. So this would be quite an interesting discussion about how that has moved in my 30 years experience from the biggest problem for banks used to be the physical handling of cash, and now the challenge is, do you still need cash? And it'll be an interesting discussion that we have over the next 40 minutes.
That's a very, very powerful stuff. So last but not least, Michael Regan, that is the Product Marketing Director of GRG. If you want to introduce yourself.
Hello, as said, I am Michael Regan. I work for a company in China called GRG. So as we were speaking about disruptors, as you mentioned earlier with AntPay or Alipay, I was there during that disruption where WeChat Pay and these digital platforms were competing with the banks. And I've been in the company for over 6 years, so I was able to see how the company transformed from solely dealing with cash to integrating digital and traditional solutions. And our company had to transform that way, so I look forward to this discussion.
Thank you so much. So we cannot talk about virtual banking, of course, without talking with the central banks. So I would like to talk, I know that is a big question that I'm going to ask Omram. So, but, okay, when we talk about, like you said, cash, digital currencies, as well, new elements of platform banking, or platform as a service, or banking as a service, we are going through a massive revolution, and this doesn't stop. I think in the last 10 years, like you said, is going to be much bigger. And we are actually right now as well getting into immersive banking. For instance, China right now has the social credit score, which is in itself another way of banking and virtual banking. And a lot of countries are starting to adopt ways of looking at tax, the way money works, and things related, like, for instance, the creative economy, and a lot of different things that are really changing the way we work, the way we do banking, the way we convert money. And of course, we have all the digital cryptocurrencies, which at the moment we have thousands and thousands, I think it's millions of digital cryptocurrencies. And at this peak, the digital cryptocurrencies reached $2 trillion. Right now, we're talking about $1 trillion. And before I start the question, just some numbers for the audience. So the world economy is around $80 to $100 trillion. Okay, so $80 to $100 trillion. The numbers are not consensual, according to whatever source from Bloomberg or World Bank and so forth. And then if you look at, for instance, the top 5 tech companies in the world, if you put Apple, Microsoft, Google, and a couple of others, Amazon, and so forth, we're talking about $10 trillion valuation. So this is a big part of the world economy. And then, ironically, the banks are becoming less, if you look at this, but we all deal with money for our day-to-day activities. So my question to you, and I know that you represent as well a country that went through a lot of challenges, but you have, I would say, a roadmap to do new things right now. How do you see this present situation we are right now, when all this innovation is creating new solutions, but in the end of the day, we still need the central banks probably more than ever. So how do you look at this, and of course, in a bigger way?
Well, let me start by giving some statistics, or the latest statistics. There are 120 countries already working on their central bank digital currency, who represents 95% of the world GDP. That's a huge number. That's moving toward digital money. For the last 6 months, the statistic says that 75% of all purchases around the world were made by mobile banking. That's part of the virtual bank, and there are 23,000 cryptocurrencies available for grab right now. 23,000. That's more than the world currency for each country. So basically, when any bank wants to get a license, they will be in compliance by the regulations for that country and for that central bank in order for them to obtain this license to operate. But there are many other risks that the central bank cannot control based on regulations or based on governance. Some of these risks, because virtual banks, or let me just go one step back. The difference between a virtual bank and a digital bank, basically they're the same, except that the virtual bank doesn't have a physical locations and doesn't offer cash. That's the only difference. Otherwise, everything else is so either a digital bank or a virtual bank. So based on this, all the virtual banking are based on technology. So cybersecurity is the major cause or issue that faces the central banks, because they don't want to go through what happened in 2008 when the financial system failed all over the world. So they want to make sure the stability of the financial system is not intact. So they have to be more regulation or more compliance in this. And because the virtual banks are basically working on technology and virtual space, it's going to be very hard, and it's a huge risk and issue. There is anti-money laundering. There is an issue too, because virtual banks offer services to so many different people in different countries and different regions. There is the other thing, the identity theft. It's a huge issue. It can be, I remember, I think a year ago, a bank in Emirate, somebody deep-faked a voice of a manager of a branch, and he asked them to transfer 35 million, and based on his voice or his voice recognition, the system okayed it, and they made the transition. So artificial intelligence or technology in this way can play a major issue, and the central banks can't do anything about these things. So these are some of the issues. Customer protections as well. So if there is a dispute, how are you going to resolve it? The bank usually doesn't have any physical assets to guarantee at least if something happened or the bank went down, they could just close their doors and go. How are you going to protect their customers? And other issues. But the benefit of this, because the world is going through digitalization. I mean, everything becomes digital. So even the money, it's not going to be the same as we used to deal with it. Everything is moving to digital money, cryptocurrencies. So this will offer access to people in the remote areas, people who doesn't have accounts, farmers and some areas. They could also open accounts through virtual banking. The competition, the innovations for this as well, it's going to be great because the competition will be huge. There is also low cost for a virtual bank. Basically, you just have a data center, or you could even rent a space on the cloud to open a bank. There's no cost at all. No, there is no land, there is no building, there's even employees, maybe 1 or 2% of what you need in a traditional bank. There's so many different benefits as well. There is issues that have concerns for most of the central banks.
So a lot of things to digest, and I think, for instance, one thing you mentioned that I think is going to be one big challenge, like you mentioned, the deep fake voice. There was actually a big study recently that right now the scams around this area are going to be completely crazy, because you can in fact deep fake a voice, and really most of the voice activation security is around voice. But as well, one thing you mentioned is the cash versus the digital. So in a lot of countries, you still need cash. And that, I'll pass the question to you, because of course you are looking at these things. So how do you manage the real physical money with the digital? Because effectively, how do you back? And of course, there's new forms of backing up, but in some countries, you still need physical cash, some more than others. And then, of course, that you can say that creates a parallel economy. You mentioned the central digital banks or CBDC, but how do you see that from your experience working on the physical part of the cash and now with the digital part?
Yeah, very good question. I think very relevant as well, because you're right, everyone's talking about virtual banking, and before, maybe 4 or 5 years ago, it was digital banking. Now the next one is virtual banking. But when I started in this industry, it was cash is king. Now, I suppose the question is cash still king? And I suppose that has now got quite a big question mark. But cash is still relevant, because virtual banks, the biggest barrier that virtual banks now have is when you have your bank account, how can you get cash? and you still need cash. So I think we're obviously as a manufacturer of physical hardware, which is probably not so many, I'm here with someone else, but that is a challenge in itself now because a virtual bank could be set up by someone sitting at a keyboard. So they have a whole ecosystem from a keyboard, but the actual challenge to actually get physical cash out of a device or to process cash is quite a big challenge now. But for banks, banks will still be there, in my opinion. Now, one of the things you mentioned about virtual banks, security. So the biggest number of fraud, last year I think it was $8.8 billion of fraud. How much of that was actual physical cash? Probably a minimal amount. The majority of it is all through e-banking, through virtual banking, and that's the biggest losses. I think in the time we're talking here on this forum, in the UK, it will have probably been equated to probably $100,000 worth of cash, well not cash, virtual cash, people will lose through fraud. If you're focusing on physical cash, it is actually probably more secure now than virtual cash. Because if you wanted to lose physical cash, a lot of physical cash, it's a lot of space. You'd have to physically have that cash. So there's an element also of trust and anonymity. If you want to buy something and you don't want everyone to know what you've bought, will you go and pay on a card or an app, or will you pay in cash? I think you're paying cash. So it gives you a sense of personal security from having cash versus paying on an app for convenience. And I think, as I mentioned earlier, the biggest challenge for banks is how do they create this hybrid from virtual banks to physical banks? And you're absolutely right that banks need to look at their cost base. They are vastly reducing number of bank branches. Now in the UK, there are a lot of banks that have left the whole town. So a town would have used to have had 6 or 7 physical bank branches because everyone wanted to have a physical presence. And now there's none. So how is that addressed? Because still you have all the small, medium enterprises. They are getting cash for their services. They have to bank their cash because they have to transfer their physical cash to make it electronic to go and use their virtual bank account. And some solutions to that is to create what we call white label banks. So there is a bank facility which has physical devices to accept cash. And then obviously that can then be transferred to your virtual bank, whichever bank brand it is. So it's a way of, I think banks are having to work together commercially to find ways to overcome, purely it's about cost. So the cost to run a physical bank, I mean, Central Bank of Libya has big buildings, you have a physical cost just to have that building. If you're a virtual bank, maybe you don't even have people. Yeah? So from our direction, you could say as a manufacturer of physical hardware that is primarily focused on moving pieces of paper, banknotes, that for us is also a challenge. So we are obviously, as a 105-year-old company, we're not going to disappear tomorrow, and I don't think cash is going to disappear tomorrow. But where cash is present is moving from the banks to the retails. So the retailers have now got a bigger headache for how they manage cash, because the first point of cash is within the small businesses which are receiving cash because their cost, that they want to open up their customer base, whether it's cash, card, or electronic transfers. So I think cash is still there. Cash is certainly reducing, but I'm not so sure it's going to go away quite tomorrow. I mean, recent studies, I think in the US, 56% of all adults in the previous week from when they were surveyed had all made at least one cash transaction. So that is still quite a large amount of cash usage. So virtual banking is certainly here, but I don't think physical banking is going, but it's certainly declining, but it will get to a level that it is most cost beneficial to make sure that commercial banks still carry out all their activities profitably, but also address the needs of the physical cash needs.
Thank you so much. And this is very important data and as well information, because the fact that digital and the physical are side by side, but I think it's going to be probably an increasing element of first the narrative around what we mean by money and what you mean by virtual banking. So Michael, I want to ask you one question because you are as well working in a traditional organization, and traditional at least in some areas, but you've been, like you mentioned, working with China. And China made a reverse engineering in the last 20 years. They became the leading fintech player in the world, at least in terms of technology. And they went actually to the extreme right now of having a social credit score. The Central Bank of China has already its own digital currency. And at the same time, there's all the things you mentioned about cybersecurity and all these different things. So how do you see this element of cyber or virtual banking when it comes to all these elements playing together side by side?
Okay, just to give some backstory, now that we have like central government representative here. So in 2020 was when China first piloted their central bank digital currency. I have to clarify the difference between these two. There's cryptocurrency, which is pretty much unregulated, and then you have to go through a lot of AML measures and KYC to change that to fiat currency. And then there's central bank digital currency, which is essentially the equivalent value of fiat currency. So 1 Chinese yuan would essentially equal 1 real Chinese yuan banknote. So I want to clarify on that. So there's challenges on both sides. So what the central banks have to balance, and specifically in China's case, they kind of banned cryptocurrency, is how do they maintain the security for the end user? Because in a lot of cases, especially in China, that the technology comes first, then the regulations come second. Maybe in other countries it's like that as well. So when Alipay came out, WeChat Pay came out, the banks had to catch up, because if they weren't catching up to what the market is acting with digital currencies, then the banks are going to lose their value. So how to provide the security is that we had to provide more KYC methods, like whether it's biometrics or whether it's one-time passwords, where it's difficult to deep fake like the voices. And this is a challenge that's happening continuously. It's not like you have one solution and it works forever. Now, when it comes to the cash part, even though people say, okay, we are 100% cashless, which you can argue, there are still regulations set by the central governments that mandate cash transactions. As a matter of fact, if you go to China now, every retailer must be able to accept cash. Even though it's very convenient just to post up a QR code and pay, they still need to use cash to pay. And as Bernard was mentioning, these retailers are the ones dealing with the cash. So there needs to be a balance between how the retailer handles the cash and how the virtual banking kind of monitors and helps the retailer have the cash flow for that business. So you need to think about, okay, the retailer needs a solution where they can deposit cash and get a credit in their account so that the money turns digital and they can use it for other expenses. And the bank also needs to consider maybe not having such a strong footprint inside the bank branch for cash, but now it's more so remotely where they sell packages to the retailers. So as far as the behavior, it really is country dependent. It's really based a lot on the central government if they still want cash running. I know in some countries, like specifically Sweden, they recently published that there must be one ATM, a cash point, between a 30-kilometer radius of every major living community, whether it's an urban community. So there are still those regulations in place that you need a balance between having cash and cashless. And I personally believe that cash will not disappear anytime soon. Maybe it's not king, but it will not disappear because of that security. When you give someone cash, your transaction's done. If they put it in a machine to make sure it's a real note, it's done. But when you deal with 100% digital currency, there might be something wrong with your bank account, or the bank may have suspected something in the system and froze your account, and then you can't do anything. Like if you're 100% cashless and they blocked your account, or maybe there was a warning that there's maybe potential fraud, then what do? You can't do transactions. So from the market perspective, like the end consumer, there also is a balance between having cash as trust and also digital currency as quick and convenient, but the chance for it being blocked like randomly.
Yeah, this is our key elements that we are all facing. I think everyone in the audience is facing this in one way or the other, and in some countries more than others, because in some countries cash is more king than others. So that brings me, of course, Randa, you have a very diverse background because you work on conventional I would say, financial organizations, and as well, now you are an advocate for cryptocurrencies, and as well, you are the founder of the Lebanese Association for Digital Transformation. So one of the challenges that we're facing is digital transformation. It's a paradox because everyone has a phone, but for instance, there's 400 million SMEs and micro SMEs in the world. Around 90% don't have a website, and they hardly know how to work in any digital transaction. They normally are having people helping manage these transactions. So the digital transformation part is still very important. And of course, if you are in more advanced economies or less, you have other challenges. But I want to start with one specific question that I think is key as well. There's as well an elephant in the room, and of course, this is for central banks and for banks to answer as well, and regulators, is that, for instance, yesterday, officially, mainstream, Deutsche Bank appealed for a digital currency license in Germany. And Deutsche Bank has $1.4 trillion in assets, which makes us, of course, one of the biggest banks in the world. So for someone that has been on the cryptocurrencies and as well as an educator, how do you see these velocities that we've been speaking here, and as well in the context of an emerging market like Lebanon that is not conventional but has been going through a lot of challenges?
Yeah. So I have to actually comment on what is said in this panel. First, let's start with the cash. I'm agreeing that the cash will not disappear. The digital presence of cash is more like a convenient or a facility for people to transform transactions. But the thing is, digital currency or cryptocurrency, if I can name it, the right term is cryptocurrency. It came after the financial crisis of 2008, and that wasn't to wipe out the cash. It was more like to bring a decentralization to what is already centralized. So the threat of decentralization has been there since 2008. And yeah, there is more than 20,000 cryptocurrencies existing, but that doesn't mean that we have to invest in all these cryptocurrencies and we have to take the risks. And that doesn't mean that we don't have to use the cash or become a cashless society. You were mentioning that the cash is for anonymity to do transactions as well as cryptocurrencies, but it's known that cryptocurrency, using the blockchain technology, you can track the transactions that are really public for everyone, where cash for illegal uses cannot be traced. This is something. And something else, I don't see much difference between the digital presence or the central bank digital currency, the difference between what they are issuing and the real cash that they have. I mean, it's more a facility and it's more friendly for customers, but it's not something new or something innovative until now, because one yuan is actually, the currencies are the same. The value of the currencies is the same. It's not changing. And this is the difference between cryptocurrency and central bank digital currencies. Now, going back to the digital transformation of emerging technologies, when we say emerging technologies, yes, we talk about distributed ledger technologies, we talk about AI, and Internet of Things and the relevant technologies. So for blockchain, it can be a facilitator or an infrastructure that could be, or actually could make digital transformation happen in several industries, not only the financial aspect of things. It's in the business. It can be used also as a benefit for virtual banks. Going back to virtual banks, so yes, I don't have to have the physical cash in order to have my banking account at the virtual bank. Now, a consortium of banks can do a white labeling, as Bernard mentioned, and that would be, the first transaction will be in cash, and then we go to the virtual representation. So when it comes to blockchain, blockchain can also represent the tokenization model of assets, digital assets, that we have a lot of exchanges dealing with today. And it's actually regulated, for example, in Dubai and other countries. So these virtual assets can be also leveraged in virtual banking in a way that they can be traded and also used as a collateral for lending and borrowing. So this is one of the transformation, what they say, a catalyst for transformation. So according to Lebanon, yes, we have suffered from financial crisis and we are still in a hyperinflation situation. So digital transformation strategy has been released last year throughout the nation, and we're trying to bring the expertise and the know-how to start something that is really used and a successful use case. So I think with the efforts that has been done throughout this year, we are going something good. By 2030, we would be achieving kind of digital transformation, but specifically and more focused on the financial aspect of things, because the banking system has already collapsed in Lebanon and most of the people are using cryptocurrencies to be able to transfer and do other things. Also, we have startups coming in Lebanon to try to facilitate the transactions and the transfer with more relevant applications to people that really doesn't know what is cryptocurrency and don't know how to deal with it, because there's a lack of awareness and education about it. And this is why we are still doing the awareness and education about the financial literacy according to cryptocurrencies and the business use cases of blockchain.
Thank you so much. I think you touch a very important thing, the financial literacy, and as well how these velocities have to be placed, because one of the biggest challenges with virtual banking is effectively, for instance, if you look at Nigeria as an example, Nigeria, which is probably the biggest economy in Africa, they banned digital currencies, but most of the people are using it. So that brings me to you, Omran. So one of the challenges is how we keep the cash, the normal kind of institutional money, and then the digital cryptocurrencies all working together. Because at the moment, it's almost impossible to stop it. It's just how can we make it not create another dystopian financial meltdown, like you mentioned, 2008, because that can happen. And that's the big risk that we have, and especially like you mentioned, a lot of countries, and we just saw in the US, which is of course still the biggest economy, when most of the banks collapsed just 1 month ago. And the economy still is up, but we don't know what is going to happen. So as someone that is leading a central bank technology, how do you see these velocities of cash, digital and virtual banking, which is supposed to be more innovative, more advanced?
Yeah, I think we are living in a turbulence time when it comes to how money works. The definition of money have changed so much from being just, some kind of currency backed by gold. Then the gold standard was removed, and based on how much each country need, central banks start to print money without any thinking of how much they can afford or anything like that, based on wars or based on economic issues they face. So cash, definitely will not disappear. And no one can say that cash will disappear, but eventually it will be losing or declining for the next decade. Maybe there will be not even more than 10% usage of cash. This is how the way at least I see it. Especially now when the revolution of the central banks, where they finally decided to have their own digital currency. And this is the major threat for cash. Because of that and the digital ID as well, the governments or the central banks wants to have more control of money and finance. Because of the threat of the cryptocurrencies and what happened in the 2008. So they're trying to steer the wheel onto their side. Well, I don't think they will be successful as much. They will have a lot of issues because whoever is given better services and more trustworthy, that's where people will go. People are not forced to use their own currency. Like in Libya, I'm not forced to use only dinar, Libyan dinar. I could go online and purchase euro or any other currency. So before you can't do that like in 50, 60 years ago. Now it's available for anybody, not just for businessmen or for big companies. So what I'm trying to say, we are living in a tough times, especially when it comes to regulations and control of the central bank. I'm not sure if we end up later on in unifying the whole money and issuing one digital currency for the whole world to work in. That's a possibility, even though it's still theory, but maybe in 10, 15 years, it could happen as well. So no one can expect what the future will bring to us. But what we can do is to have control, to make sure that our money is secure. We put them in a trusted place, and there is regulations, there is governance, there is rules. If I lose anything, somebody can guarantee that I can get my money. And at the end user, it doesn't matter to him which one will be using, the central bank digital currency, cash, or the other means of money. So in another way, it's tough times, as I said. Lots of things will be changing, even the regulations. I'm thinking within 2 or 3 years, there will be a lot of change dealing with the digital money and with the cryptocurrency. And they will accept it at the end, at least some of it, by governments and by central banks.
Yeah, it's a lot of questions, and you're right. People, in the end of the day, want solutions that work for them. So we are concluding. So I will ask just if each of you panelists, starting with you, Michael, can just give, okay, how do you see the best scenario, and 1 minute maximum because we have a limited time. How can you see a better future and present of virtual banking? So starting by you.
Okay, when new technologies come out, you have to analyze the market feedback, and there needs to be a player that negotiates or works with the government to guarantee security, that there's no anti-money laundering systems in place, and to kind of make it harmonious between digital and traditional. Because as I said, people trust cash more than digital in most cases, and in other cases, they also trust digital more than cash. Like if you go into cryptocurrencies, it's easy to send that cryptocurrency anonymously worldwide. But a challenge that the world has in total is having one central system, whether it's central bank digital currency, to do cross-border transactions. Right now we have the SWIFT. What will be the future? That is difficult to tell. Time will tell.
Yeah, and on the same note, where the cash still has a lot of relevance, where you have international trading, and you have things like international trading sanctions. I mean, at the moment, obviously places like Russia are heavily sanctioned. So suddenly in Russia, everyone's only using cash. If they want to travel, obviously I guess we've got some people here, they have to use cash because international sanctions sometimes prevent people who obviously perhaps should not have affections by international sanctions and things like this, but cash still remains in use. Even something fairly recent in the Netherlands, there was a policy because the whole card network went down. So the government issued a decree to everyone, make sure you keep at least 100 euros in cash so that you can buy essentials. Because if the electronic payment system stops, if there's a network failure, if you're in a virtual bank or you're not using physical cash, everything stops. So cash will still be there, but maybe not king, maybe it's somewhere down the chain. But certainly it still will have relevance and importance.
Well, I think that the central banks and the commercial banks, virtual banking, of course, should keep an eye on the AI-driven customer behavior, because AI is now leading, and I think that considering distributed ledger technology, especially blockchains, would add value and the means of tokenization for business users. So. Separate from the cash thing, of course I agree with them. So, but everything is now based on the internet, even the money. So it's either we die all or we survive, all of us. So I think it's coming, but yeah, we cannot predict how the balance will be. But surely the central banks should take more consideration the existence of other ways of money, such as cryptocurrencies, and also engage more in the business models, not only focus on cryptocurrency for the AML and the compliance, also focus on other aspects of the technology.
Last word.
I think we all need to keep close watch on what's going on the world, especially now BRICS. The alliance of BRICS is coming out, and they're trying to release their own currency, unified currency, digital currency as well. I'm sure other countries or other, in the world, I mean, they will be doing the same thing. So like the BRICS 5 countries are members right now. Maybe by the end of this year, there will be more than 10 or 15. Imagine all that. They represent like a huge number of the world GDP. They will be using one currency that can be dealt between all of them. So as I said earlier, I think we're getting closer to the world currency. I mean, this is the direction that we see it's going. So we have to be very careful on what's going on. We follow the news. We follow these events, like the instance that you mentioned for one of the banks, when they want to issue their own digital currency. So there's a lot of going on. So what we need to do is to make sure that we are aware of what's going on, especially for the small banks and the commercial banks, to get benefits at least from the data that they have, and maybe change their business model that keep them or make them stay in the future.
Thank you all. So this is a lot of great insights. We could talk for hours. So I think I would just pass in a very more open final note that it's all for us to decide what is going to happen. And actually, we have much more power than we think. I think from my experience working with central banks and building technology for banks and as well AI, for instance, I'm actually building a virtual avatar that can actually speak with the human. So I think if we actually use these technologies to empower us and create value, and I think especially focus on financial literacy and common sense before tradition and future, we all have a future brighter than ever. But if you actually become afraid and go to the room closed, then we have a problem. So it's all to us to work together. Thank you so much.
Thank you so much to our moderator and dear panelists. So we listened to the future of virtual banking. Thank you.